as well. So let's start with your list of stocks today.
Absolutely. And I thought this was interesting because finally you're seeing stocks react very sharply to order wins. Perhaps you can see that today as well. The first stock on my list is NCC, and it has gotten orders to the extent of 10,000 crore rupees, 10,800 in fact, crore rupees from BSNL. This is certainly a thumbs up. There are two orders here. The first order is valued at 2,647 crore rupees, and the second value is for 8,157 crore rupees. What is this for? It's essentially for the construction, maintenance, and in fact, the ongoing care of certain networks. So it will design, supply, construct, install, upgrade, and maintain these networks. The orders will be executed over a period of 3 years with a maintenance for a period of 10 years. From what I saw, a bulk of the analysts that are tracking the stock, 10 out of 15, have a buy rating on the stock, and the implied upside is over 30% at this juncture. The stock, of course, has moved up in the recent past, so bear that in mind as well. Satin Credit Care is the second stock on my list, and this is essentially another one of those microfinance lenders that went into a little bit of a troubled time, or in fact, it went into rough weather over the last few quarters where it saw elevated non-performing assets. And there is, in fact, a sale of non-performing assets that they have done with a value of 213 crore rupees, but they will only get 42.6 crore rupees of that. It's interesting to note that this is actually a sizable chunk for this player because the GNPA, the gross non-performing assets as a percentage of overall assets for this lender stood at 3.9% in the third quarter, and its net non-performing assets stood at 1.5%. It had recovery against write-offs in the period of April to December of as much as 27 crore rupees. So effectively, it will be earning more by selling these loans that it has most certainly written off. So it certainly is going to be positive for this company. The credit cost stands at 5% in the third quarter, and in its investor presentation in the third quarter, it had guided towards maintaining it within that range, even though it is a little elevated. The last stock is also going to possibly react to an order win, and this is Waaree Energies. No, actually it's Waaree Renewables. Waaree Energy is also going to be in focus because it's going to inaugurate a solar plant cell in Gujarat, but I'm talking about Waaree Renewables. It has received a letter of award for an order worth 232 crore rupees. The order is for 170 megawatt solar power plant. So this is certainly something that you should keep on your radar. The stock was down about 3% or so yesterday, Tamanna, but I think a raft of these stocks that ran up very quickly did see a cool off yesterday.
Yeah, so that's the tricky bit. We saw the same with defense, for example. Some of those real estate names,
PSU banks as well.
PSU banks as well, absolutely. Let's come to the three on my radar this morning, on my watch list, so to speak. And the first one is because of a brokerage note. So a thumbs up for Laxmi Dental because of how excited Nuvama is. They've initiated a buy on Laxmi Dental with a target price of 570 rupees. They say it's an end-to-end integrated dynamo in an underserved yet growing market because of their shift to metal-free products, digitalization, catalysts for lab business, and aligners. Nascent but thriving segment is aligners. Kids E-Dental, a pioneer, see their revenue adjusted PAT CAGR of 26% and 59% respectively, with the ROCE rising from 19 to 29% over FY25 estimated and 28 estimated, so over a 3-year period. So this excitement, I mean, they've called this a dynamo of a business. It's a recent listing, Laxmi Dental, and in a space where there are not too many listed companies to really compete. So Nuvama has given it a thumbs up. The stock was down 5% yesterday. Watch out for a Laxmi Dental. AU Small Finance Bank is the other one that we're watching out for. Goldman Sachs has maintained a buy but cut the target price from 813 to 796. Nevertheless, it is a thumbs up. They say it's a GARP play with industry-leading earnings growth profile. Valuation derating is an opportunity on sector lending earnings growth over FY25 to 27. They believe AU Small Finance Bank will likely start delivering a strong growth momentum in the second half of FY26. They expect the bank to deliver earnings growth of 31% between FY25 and FY27. Remember, even among all the microfinance players, AU Small Finance Bank seems to be relatively healthier. They had a clarification recently on reports of a management change, and after that, you've seen some recovery. So that's why you're seeing that big, that pattern on the charts as well. So AU Small Finance Bank is the second stock on my list. ONGC is the third, also a thumbs up. They will be infusing up to 3,300 crores in their arm ONGC Green, which will utilize the proceeds to buy Ayana Renewable Power. So ONGC Green is a story which is cooking, and one that we need to look out for. So that's the third one on my list.